here. See that we have mentioned all of these lows were taken, even these ones down here, even these were also tapped on the Dow Jones. So the Dow Jones reacting very outwardly, let's say, much more of an expansion than the US 500 and the NQ. So one of the sisters is misbehaving, and it's pretty much the Dow Jones reaching out for all the sell side liquidity, leaving behind all these sell stops that we were going to refer back to for a buy program to anchor our B leg. They're not looking so hot in terms of like a low that we can refer to expand higher. As well as something else that I want to point out is that we had this huge higher high to lower low compared to Wednesday and Thursday. So when things like this tend to happen, it's considered an outside range because we've traded above and below previous day's lows and highs. So that's a huge indication sometimes if we zoom out to the daily chart. That's sometimes an indication that a market reversal can occur very, very soon. Something like this, where we have a low to high, and then the next day we have a break on the higher high and the lower low. 10 a.m. news at 10. But all in all, I'm not liking this price action at all. We're still in search of that B leg because we are still technically in a higher time frame buy program. Super duper higher time frame. So we're still technically in this huge buy program. So there's a bunch of other lows that we can refer back to here and looking to see if we can get that B leg over so that we can finally get that expansion that we needed above 25% to continue to higher prices. But because we have a lot of sell side here that, what should we call it, that was reacted off NQ, I'm not feeling so confident that we might even reach down to those levels. Like, this is really dangerous stuff here, guys. Added to the fact that we have that reversal change condition, we could start seeing price turn over into a bearish market. Quote unquote bearish, right? But it's still actively seeking the deepest discount low to get into continue this buy program. So where is that second up right here? From this low to this high is a whole buy program, right? So we're looking at the old previous lows to see what kind of liquidity is left over to anchor our B leg. But because all of these were already referred to by the Dow Jones and not by NQ and ES, this is a very Six Sister approach where the Dow Jones has already ran through its liquidity. So it's just a matter of the other two to catch up. So if that's going to be happening, we're going to be seeing all those be taken. Low probability anchor points from which we can see expansion up higher. And then we could, even though we are in this higher time frame buy program, now I would like to see a turtle soup entry have occur below the low of this because it represents the low of the month. So we could see a turtle soup here and then continue up higher for higher prices. So now this is what I consider us trading into the phantom leg, right? Because there has been nothing settled in stone. So from this high, as it's been traveling down lower, we were looking for our B anchor point, right? But it's traveling down lower, lower, lower to discount, and is not finding that area of support. So in the meantime, we are short-term bearish, long-term bullish. And until we find that cracking correlation on discount, which I think will occur all the way down here at the low of the month, we'll see a higher price of form. In the meantime, we're looking for all pools of liquidity to be taken. Lower, lower, lower. Now this is a structure that I support, right? Because it fills in with our with our, I guess, perspective that we're going to seek lower prices. So if we're going to see lower prices, and look at this bullish breaker, which was this little block right here of price. See how it was traded to, and then treated as an inverse, but it's still wicked up into the SIBI up here in the form of an institutional order flow entry drill. So it was a quick wick, quick repricing, and immediately sold faster into this external range liquidity. And then we're gonna tap these lows. Let me mark this up before I forget. Path. I feel like we're gonna treat this as turtle soup, right? External range low from this green area. We're gonna trade up into the high of this red box, the 15U, and then continue this trend of going down low. That's my prediction. 2025, right? Turtle soups, up to these highs, and yeah, because we're still looking for that deeper discount retracement, right? See me open. We can trade all the way back up here. Now market red. We trade up to these highs, get an S&T divergence. Boom. Now we're inside a short-term sell program. Price retraces up to 75%, closes below 75%, while taking that trade over to continue the discount rally. Now we have a confirmed sell program, mini sell program, and every structure that's in place within that sell program, we're taking it. So if there's a signal here that says that we should be going bullish, I'd rather take the inverse of that and continue lower. Right now, it's still kind of low probability, to be frank, for anything, because we're not in a confirmed buy program. We're not in a confirmed sell program either. We are just in a higher time frame buy program, looking for its little anchor point, its little B leg. Okay, see that? So it looks like we're using the external range liquidity from this low and just using that as resistance. Price does not want to go up there. Does not want to go back up there. So this could demonstrate to us speed that it wants to get somewhere quickly with reprice down. And right now what we're seeing, the low-hanging fruit, is the event horizon. So that's where you can see price reprice to fairly quickly, especially since it didn't want to trace up that high. Okay, are we seeing price eagerly wanting to go down to event horizon? Okay, so what would be our next entry? Our next entry would be up to this bullish inverse breaker, right? Because if we take our fibs and anchor this dealing range from this high to low, where do we want to enter? We want to enter on premium, right? If you want to sell short. So you want to sell short, enter on premium. This is our premium array right here. And look at that. Old areas of support now turned resistance, right? Old low. Look at how quickly it repriced to. So that would have been a nice entry. We didn't even rebalance this either, so, or maybe it is balanced because on this sell side leg, this came up as a sell side buy side delivery, immediately repriced, have that little gap there. So this would have been, yeah, this would have been considered price from this low to this high. Balanced price range, old liquidity pool low. Look, it didn't even challenge it as it went up there. Went up there, quickly went down lower. So it's definitely in a hurry today. Don't want to see this repriced up to because it's a balanced price range. Should be at least. Especially after that reaction from the implied fair value gap. This is an intermediate high now. Look at that SIBI. Traded up. SIBI is a buy side imbalance. Now it's buy side balance, sell side efficient. Sell side imbalance, buy side inefficiency. Buy side efficient, sell side balanced. This area now is balanced. Market as a intermediate high. We don't want to see price get up to these levels. We're definitely experiencing a little bit of heat here, but it's only in anticipation for the red folder news. I'm a little nervous, to be honest, because we could get stopped out easily. It could price could just shoot up and then continue down lower, especially because we're in this red folder. But I don't know, because it's just being what is it, ISM. It could act as just like a support on the move that's already been initiated. Just continue its repricing down lower. This is definitely a little scary, but we're trusting the fact that this is an intermediate high now, especially after rebalance this SIBI. So we're looking to see if that will continue the delivery as such. We got a minute now until the news opens. Red folder news. No, I want to trust the fact that we're going to continue seeing lower prices, especially with the sponsorship of Red News folder event. So when I opened up the stream, I said that we were going to be reaching down to event horizon, which was the equilibrium price and the 25% quadrant level. Did we end up hitting that? Which we did. Now I'm anticipating it to reach over down there. So even though we've referred down to these lows already via our Dow Jones right here, yeah, very low, lower, low, and we refer back to these lows as well, low, lower, low. That's why I'm looking for these lows to get taken. But when it came down to it, look at this, low, higher low. See that wick on US 500, low, higher low. Same as this candle right here. The low here, low, higher low. Here, even though we tapped it here, coming back down here again, we didn't quite tap it. We could be looking to fill this type 2 dealing range from this high to this low. If that's the case, going long here would be a great buy, right? This is still like a it's an order block here. These are the ones I'm testing out because I really suck at these, you know. Okay, I really suck at these vendor types. Hang on, guys. This is me just trying to practice right now because I know these lows were already referred to, going down lower. But as we're making this leg up, I'm trying to still understand how to navigate through that phantom leg because that's the most challenging time. And there are some things I'm thinking about how the market uses old lows, even though they were reclaimed by a different correlated market. Treating them again, how it can repel price like this low. This is not random. This swing low here, not random at all. We had this swing lows that were, even though they were referred to earlier, as they were being referred to again, they were not tapped on the other sister, on the US 500. We're also seeing this type 2 dealing range. So how can one get involved? That's what I'm trying to understand.